Let's talk about the markets itself. George Heber-Joseph, who's the CEO and CIO at ITI Mutual Fund, now joins us to discuss the fundamentals of the market. George, thank you for joining in. We've seen a near 1,000-1,200 point sort of recovery from the lows on the Nifty, 15% on the Nifty Bank as well. Safe to say that we've made a near-term bottom and the war risk has been priced in, and maybe we're also done with the first rate hike, with the path to rate hikes. Everything has been priced in, or is there any other risk to the market?
If you look at all the commodity prices have been moving up for some time, and that is going to be creating the input cost pressure for a lot of companies, be it consumer durable companies as well as various other companies in India. And as oil price moves up, even at $110, $111 per barrel, it is not going to be an easy situation for India from the fiscal as well as current account deficit point of view. So we are of the view that there are going to be more volatility in the market in the coming quarters, and it will impact a certain amount of growth also for Indian companies, and also it will create a margin pressure. So it is better to think within the sector which one to pick and choose. That would be the strategy that we'll be following. And we see that the supply chain disruption is going to continue for some more time. And post-COVID, if it has not normalized, and alongside you are having this war kind of effects on the commodity prices, so it is going to be tricky at this juncture.
George, morning. Reema here. So you're saying on an aggregate basis, the market has not priced in higher crude prices, Brent prices around at 110, even $120 per barrel. And then if you could just follow it up with some idea on how to select stocks. What are the themes that you're betting on and why? What is the rationale behind it?
Right. Typically, what we believe in is we have seen the worst of the engineering and capital goods sector derating in the last 10 years. Every decade, the scenario changes. And, we believe that, that is the sector which has to be looked at very closely, because the earnings growth has been severely suppressed. And that is the segment which is looking very interesting for us from the next few years perspective. Because 1990 to 2000 was the technology, media, telecom boom. And then we saw the next decade, 2000 to 2010, being the infra boom in the country. And 2010 to 20 was consumer boom. So we believe that the next boom is definitely centrally located with India-centric businesses doing well, and especially infrastructure doing well and consumption in going through a derating stage. The input cost pressure, what we have talked about just some time back, that is also impacting the consumer discretionary and consumer staple segment, and which is in for a long-term derating because the valuations are very high. So the way to look at it, infra as a theme can be looked at very favorably from the next 3 to 5 year perspective. But from the near-term perspective, probably IT, pharma, and commodities can be looked at. Because they are going to be the beneficiaries of the high energy prices, and we strongly believe that energy prices are going to be in the escalated level for some more time.
All right. Hi, George. Good morning, and thanks for joining us. This is Pavitra. If I can ask you about just the IT space in specific, we did get the Accenture news overnight. They've hiked their revenue guidance once again for FY22. Do you think this would have quite a positive read-through for Indian IT as well? And do you see some more up move for the Indian IT companies?
Definitely oil at current levels, as well as, the current account and the INR depreciation at the offing. Definitely IT will be in the limelight. And, definitely the growth which has been displayed by Accenture is very encouraging, which will have a positive benefit to the IT sector. But nevertheless, we have to keep in mind, all these sectors, specifically which we talked about, IT, chemicals, and some of the sectors which are consumer staple sector are trading at an extremely high valuation. So the growth is the biggest positive factor today we have in IT sector. The day the IT sector sees the growth slow down, I think the massive derating can happen because it is trading at 10, 11 years highest valuation point at this point in time.
George, we'll have to leave it at that. Thank you very much for joining in. Need to slip into a very short break, but when we return, we'll get you excerpts from our exclusive conversation with Anil Agarwal, Chairman of Vedanta and Executive Chairman of Vedanta Resources. Stay tuned.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.